Hello viewers, in this video I'll be going over the Dow Jones ETF ticker symbol DIA. At the moment we are down 15 basis points and we still have about 3 hours left in trading. On the 1 hour chart we do see the 1 hour MACD pointing negative, and on the 4 hour chart we starting to see a diverging MACD on the 4 hour chart, and we got off of overbought territory on the 4 hour RSI. So what I'm looking here is if we do close above the 18 moving average, that is a good strong support for on higher. The trend may move higher. However, if we were to break down and close below this 18 moving average, the trend will most likely be sideways and head down lower. On the daily chart, we're starting to see the MACD turning positive or pointing upward, and the 50-day moving average, I would consider that as immediate support, but I would see this as a good decent support right here, where the 18-day and 9-day moving average are relatively around, which is at the price of $255.50. So I'll mark that as support. And for resistance, at the moment it is at the all-time high, which is at $266.60. So if we were to continue on higher and finding support on the 4-day or 4-hour moving average, and that price movement is about 2.3% move up, and if we were to continue down lower and find support, that is about 1.9% move down. So on to the next module. I'll compare today's current trend with this trend that dated back to November 25th, 2009 to February 24th, 2010. I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we have an uptrend for several days, and then it proceeded to break down, and we see it touch the bottom Bollinger Band right here, and this will be red, and then we see an attempt to touch the middle Bollinger Band, but not quite, and then we proceeded down lower, touching the bottom Bollinger Band once more, and then we see a quick reversal touching the upper Bollinger Band right here. So we have this as a green circle, and this trend we do see an uptrend for several days, and then it quickly broke down immediately, and we see a touch on the bottom Bollinger Band right here. This will be red, and an attempt to touch the middle Bollinger Band, but not quite, and this will be blue, and then we have here a touch on the bottom Bollinger Band once more, and then immediate reversal and touch the upper Bollinger Band. So you start to see the pattern shaping. So what we have here is 1, 2, 3, 4, 5 points, and we have 1, 2, 3, 4, 5 points that are similar. So there's reason to believe that the trend and patterns are similar. The trend or outcome would also be similar as well. So let's head to the forecast model. I'll go day by day where the Dow Jones or DIA head to in next coming days. So again, the trend that we took a look at was November 25th, 2009 to February 24th, 2010. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So back in 2009 to 2010, the Dow Jones was up around 2% or 1.9% back then. And here's the line chart that I compared it to. So we have the current trend and the 2009 to 2010 line chart overlapping, and they are a good fit. And that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.